Gentlemen, thank you both for coming in. I'd like to ask by asking you, Scott, 2010, what are your predictions? How do you see it panning out?
Well, it actually turns out, I think, that if we first look maybe at 2009, 2009 has not been as bad as everybody says. It's not Armageddon. In fact, if you look at the first 3 quarters and annualize them, we'd have a year which is probably going to be about the 4th or 5th, maybe 6th best year ever for M&A. So we're nowhere down where we were back in 2002-03 when the market truly dropped out. That said, whether in fact we actually do see growth in 2010 is still, I guess, up for debate. We certainly have asked about that, Paul. I happen to personally think that we are going to be seeing stronger activity next year because all the indications seem to indicate that there is a lot of pent-up demand. I don't know, Paul, what do you think?
I think 2010 may be too soon. I think we're looking at more...
Although we're not trying to answer the poll for everybody
No. Everyone gets to answer the poll.
Too many clues.
Right, but that's the hint, is 2011. No, we're looking at more 2011. I don't disagree with you. 2009 hasn't been as big a catastrophe as anyone, as the pundits have said. However, let's take, for instance, the IPO market, which is very important in the directors and officers area, which I'm also involved in. We have seen in 2008 and into 2009 the worst years of IPOs on record. And this is in the United States, where last year, for instance, there were about 60 IPOs. On average, you have somewhere around 220 a year. If you look at outside of North America, average about 1,500 a year, and there was about 250 last year, and this year is following the same pattern. And that presents a lot of problems, Scott, as you know, in the private equity area.
Absolutely.
I mean, this is the exit strategy. This is how these people, these companies and the investors get their money back. And that's the one thing in 2009 that we did see, and 2008, the fact that private equity companies were not as much involved in the M&A landscape as history would show us.
I'll tell you another thing that's actually changed. Was just looking at hostile deals, too. There's already been almost 80 hostile deals this year. Certainly everybody's talking, as you did, Martin, at the very beginning about Cadbury and Kraft, about Xstrata. Those deals were hostile deals. It looks like we're going to have more of those deals than we've seen recently. Those deals bring their own problems. When, in fact, people are rejecting a bid that may be a very attractive offer, and especially, by the way, where ultimately about 60% of those hostile bids do get withdrawn, very often because of the rejection coming from the board.
All right, and this presents problems on the insurance side for directors and officers insurance. You're rejecting a bid. Let's take the Yahoo.
Right.
The Yahoo deal.
Yes, 63% premium on that bid.
So they reject that bid. What do the stakeholders, what do the shareholders in Yahoo say? Well, actually, many of them were quite angry that they rejected the bid. And the question was why? Why did the Yahoo management? Maybe a little bit of, hey, this was my company that I built, and it was my idea, and I don't want to give it away. And I still want to be in charge. You certainly couldn't say that a 63% bid above the asking price was unreasonable at the time.
Yeah, and the issue actually with that one is perhaps even a bit more complex. If you think about it, a 63% bid is probably unlikely to be outbid by somebody else, especially with something like Yahoo. I don't want to just spend the whole time talking about that particular deal, but where you have bids that are a significant premium over what the share price was in the period leading up to the bid, and then to have that rejected without there being a possibility of a competing bid coming in that would be even higher, you do introduce that problem that, as you say, for the target board. One of the things that you have to, therefore, as a board consider is whether you're playing hard to get, in which case you are just really inviting a higher bid, perhaps by the initial bidder or by another bidder, or whether, in fact, you've actually played too hard to get, in which case the bidder goes away.